Hello everyone. So, as promised, I will be showcasing the analysis for AngelOne, which is our which has the most allocation in our portfolio. So, we got most of this from Screener. So, I'm thinking we might as well go over to Screener and analyze the stock. But before we do that, I just wanted to explain how AngelOne makes money. They are primarily driven through brokerage fees, margin funding, transaction charges, demat and account charges, and the rest financial product distribution, interest income, platform subscription, and proprietary trading. Um, I don't think proprietary trading is applicable here, but the rest of these have seen a substantial increase in recent years with the largest number of retail traders in India's economy. And let's go to Screener to understand more about the stock. Right. So here we can see that the stock PE is currently at 17.5, whereas the industry PE is 15.1, which is not great. But if you look at the chart, the median PE of the stock is 19.5, which suggests that it will rebound from current levels, and I believe it already did yesterday when it increased by 4%. If we look at the stock price, we can see that currently it's trading below the 50 and 200-day moving averages. And usually, when it does that, like it did here, it rebounds back up above those levels, as you can see that historically as well. So we can see from quarterly results, it has a general increasing trend in sales with strong year-on-year growth. Operating profit margins are around 40%. Net profit is also increasing. If you would look here, uh, this is the same in the PNL as well, where we can see sales are increasing mostly year-on-year. Didn't decrease in 2017 and 2020, but except that they are increasing year on year. Yeah, recent years have seen stronger sales growth, and operating profit margin is around 40%. What concerns me a little bit more is that similar companies, like companies in the same space, such as Motilal, Oswal, have a profit margin around 50%, 50-60% here, which is substantially higher. Um, we can go over and see some more examples. For example, ICICI Securities also have a 67-70% margin, which is substantially higher. And the last major example we'll be looking at is Novama, which also has a 50% operating profit margin. But back to AngelOne, I believe there are uh, substantially more positives that are in the stock as well. The net profit you can see has ramped up quite nicely here. EPS has also grown very well, and the dividend payout is about 25%, 25-30%. As you can see from the balance sheet, they have high reserves of 5,188 crores, which is a lot. Their borrowings, which are mainly long-term borrowings, are 3,114 crores, which, although they may be a lot, they can clearly pay a lot of it off using their reserves if they need to. Their fixed assets have also increased, and we can see that they bought substantially more computers this year, which would be explained by the increased F&O activity and the increased trading and the number of retail investors, which is a good thing. Then they have In other assets, they have a lot of cash at hand with 10,000 crores. And if you look at the cash flows, operating activity is negative due to other items as well as loans. Investing activity is also negative because they bought a lot of fixed assets and other investments. Well, they also sold some investments, but the main thing you want to look at is financing activity. Um, we can see here that they have a lot of proceeds from borrowing, so that's just loans, and they've also repaid some of that borrowing here, as well as paid dividends and interest. And the main thing to see is that the net cash flow is positive, which is good. Their debtor days are seeing a decreasing trend at 42 days here, and their cash conversion cycle has also reduced. The ROC is also pretty high at 39%, which is good. Promoters have decreased their shareholding by 0.4%, which doesn't worry me much. And foreign investors have actually increased their shareholding here, um, although it is less than December 2023, but they have decreased from September. They have increased it. And especially, I like to see that Goldman Sachs has increased its allocation in the portfolio. And yeah, that's just us going through the screener. So let's go back to the document. Yeah, so key investors here are Motilal Oswal, White Oak, Nippon, Goldman Sachs, which is good. And here, this is important. The gross broking revenue split is F&O is 85%, with cash 11% and commodity 4%. So mainly we can see F&O activity has is like a huge revenue driver for them. And yeah, let's go down. So we can see that AngelOne is currently the third largest stockbroker at 15.25%. And that is pretty big for the Indian market. We covered this. And yeah, I just put some screenshots in there. Next, their leadership team is experienced with an average tenure of 3.7 years. And we can see here that one negative is that the stock price is extremely volatile because its volatility has been higher than 75% of Indian stocks. However, if you look in recent times, it has fallen quite a bit. So it does present a pretty good buying opportunity. That's why I am picking it up. And yeah, this article mentions how retail investors have added over rupees 60,000 crores in 2024 and beat 2023 flows by nearly 12 times. You have to realize that it's not just investors increasing the amount of money they're investing in the market, but new investors investing because of these new apps and technology that is now available way way more easier than previously it was. So we can see how the F&O segment is also growing very nicely. um and if you look here, one more thing before we go to the price targets is that the government did try to reduce the F&O activity due to high speculation in these markets and people losing a lot of money. So you can read this article. I'll put it in the description of the YouTube video. But I summarized what it said. So to discourage excessive speculation and uh, losing money in the markets. They increased lot size, restricted weekly expiry contracts, and imposed higher transaction charges. So, if uh, higher transaction charges will be beneficial if people are not discouraged by these higher costs to do F&O trading, but we'll just have to wait and see about that. And yeah, their objective was basically to help protect loss making retail traders. So we'll have to see how it plays out. But I believe with the amount of retail traders there are, their revenues will still continue to increase. Some pros of this government policy could also be that there's more liquidity in the market and it's more stable, so more people would be attracted to it. And in the long term, you do want a more stable market. And there is also a lot of mutual fund growth happening. Here you can see one of the best quarters of SIP registrations. And yeah, I believe this is from the con call, right? Is it? Yeah, it's this con call summary. So let's just look at that a bit. They introduced fixed deposits on the platform. So that's cross-selling products, which is also beneficial for them, and credit distribution as well, which is also a space that will be growing in the future. And I already mentioned mutual fund growth. As we discussed already, broking revenue grew 2% and F&O contributing 81%, which is the large part of their revenue. Their profit after tax increased 44.6% quarter on quarter, which is their highest ever, which is why I believe this company is headed in the right direction. Their client base expanded, their trading activity increased, their market share is also increasing, which is good. And this is also something that that is pretty good, is that they're now going towards the wealth management and asset management side of it by ramping up relationship managers. And if you look at the guidance, they're confident about long term growth driven by client lifetime value and diversification of product offerings. Like we mentioned, they have opened FDs and they're offering credit now, which is you don't need to uh, like go through any other registration for that. It's a straightforward process, which is good. And they anticipate breaking for new businesses like credit and wealth management between 1.5 to 3 years. This is also this stock I would also keep for the long term, but since we're making this portfolio for 1 year, I still believe even in 1 year it'll do extremely well. And in the new elections, I believe that they will have some favorable policies, although obviously nobody would know about that. And yeah, I did mention I want to go through the Motilal Oswal thematic report. So let us go to that. Right. So as you can see, Motilal Oswal has published a report and has mentioned these companies here. I'll put the link for this report in the description as well in case you want to have a look at it, which I suggest you should because it is a pretty detailed report. They believe that AngelOne is muscle for sustained growth, and their target price is 4,200, which is substantially higher than the current price since the stock has dipped. And it mentions the strategic shift from conventional brokerage model to fully digitalized approach. And let's see what else it talks about. It mentions the share of non-broking revenue to increase, as we already mentioned, the new avenues that they are now looking into, and mutual fund book expanding margins and equity delivery cost driven by price hikes So yeah, it's all moving towards the right direction. Let's look at some other things now. um already mentioned this. Yeah, see, this also mentioned the loan distribution and the wealth management and the asset management that they are introducing. Now, this mentioned that they will achieve break even within 6 months, right? Which is pretty good. Uh, so, same as we discussed, even they believe that it is currently difficult to ascertain the absolute impact on volumes that the recent circular about FNO activity will have, which we just discussed. And the recent pricing action where broking increased from nil to 20 rupees or 0.1% per executed order. This will help profitability in the long term. And yeah, they have strong growth. So I really like this company. Again, some of the key risks are the FNO regulations, which we discussed, and a sharp correction in equity markets, which, well, the Angel One definitely did have a sharp correction, but the stock is generally volatile. Now let's have a look at the target price. So if we look at this, we have a couple of websites here that have given target price. My target price was 3,311 at the time, which presented a 30% upside from current levels. Money Control had 7 analysts say it was a buy rating. No, it had majority 71% of analysts say it was a buy rating, with equal saying hold and sell. You can see that here. In Money has a not 3.46, must be 34.6% upside. Um, with, yeah, 31.46, sure, with a high of 4,200, which is the same, almost the same as the Motilal Oswal report, and a target of 3,488. And if you look at the analyst rating of from TradingView as well, they have also given it a buy rating with a max of 52.32% increase, which is a lot, and an average of 36% from current levels. HDFC Securities also had a target price of 3,860, and Motilal Oswal, of course, had a target of 4,100. Although these are not very reliable, I would say, but it is pretty useful to look at them to see in which direction you believe the company will go. In this case, it supports my research. So, yeah. Again, this is not a buy sell recommendation video, it's just my analysis of the stock and me paper trading this stock. So, yeah, this is the first stock of the 2025 portfolio, and the next stock I will be researching and showing the analysis is HBL Engineering.